Welcome to Thursday Night Stock Charts Live all over again. Thanks, Jeff. Appreciate it. What we're going to be talking about tonight is the closing price action potentially of the major averages for the week. One trading day left to go. And, well, Amazon's really taken off here. Wow, I'm glad I didn't do an earnings trade on this sucker. Wow. All right. What we're going to talk about is Fitch. We're going to talk about the reaction by the markets. We're going to talk about the dollar. We're going to talk about the yields. We're going to talk about the yield curve. The yield curve in particular, folks. We're going to talk about the direction of the overall market. And what I cut myself off of saying, because I muted myself, was I finally remembered later on about, because it had me curious about Coinbase's increase of 200% in vol. As it turns out, I didn't realize it was his earnings today, so that's what makes sense. I should have known that. Jeff, thank you. Talon, thank you. I'm firing my producer. I'm finally going to do it. Hello, Bob. How about that? Apple? Yeah. It's not going to be good. Okay. How are workouts going? They're going good. I got off my diet a little bit. I wasn't eating as much protein, and I'll tell you, I felt it. I went on the bench press the other day, no strength at all. So the other thing is, I got to have a shoulder replacement. So I'm kind of bummed about that. So that's next on the pike. Pretty much no, I have what you call arthritis. There's no movement in there. There's no, it's bone on bone. So they have me on shots of cortisone. But thank you for asking. Why do I look like I put on weight? Probably do. Okay. Okay, let's begin with Amazon. Let's begin with the good news. Amazon really ripped through resistance on earnings here. And their numbers were stellar. Really, really stellar stuff. I don't know if it's going to be on here, but I read a separate article before we went live that their advertising unit, I didn't even know they had an advertising unit, was churning out $10 billion worth of revenues. Amazon Web Services, I think that's what really drove the business. So net, they did a really good job here. They guide for Q3 sales of 138 billion to 143 billion, meeting and or exceeding estimates for the next quarter. I always look for the what they were expecting, which is a CIQ analyst survey. I want to look at their bottom line and top line. EPS 65. What do they expect? Come on. Operating profit. This is all forward-looking guidance. They're not telling me what the results were. Either way, they were great. They were good stuff. There's no sense in worrying about the numbers. It's good stuff. They're going up higher. So, good stuff for Amazon. I'll be honest with you. I'll probably be selling calls on this because I'm bearish on the market and getting ever so more bearish on the market with every passing minute. Now, the opposite side of the spectrum is Apple. Now, Apple is just getting pummeled in the after-hours session. The anticipated market maker move on Apple was $6.61. Right now, we closed at what? 191.17. We're within that range, fairly accurate. And this is not going to bode well. Let's see if the futures are responding here. Not much. VIX is up. Yields are flat. Yields are flat. So, big trouble here with Apple. I mean, the They're a one-hit wonder. I mean, they missed on iPad, I should say. Apple shares lower after reporting a decline in iPhone. That's their bread and butter. What else do they really do? They have the services business, but what they don't produce really any gangbuster products anymore. Their legacy is the iPhone, and that's what they're living on right now. I just don't get where they go from here if their iPhone sales drop off. To me, it's the only phone I would use. I can't stand Android, but we're going into bad times, and who's going to want to upgrade to an iPhone if their old iPhone's doing well? I mean, I wouldn't swap it if I didn't have to. So there were a lot of misses here on revenue. They missed on revenue, and that's the big problem. They beat on EPS. Never pay attention to the EPS. Always look for sales. Sales are what matters. EPS can get manipulated. One time hits to the EPS, one time gains, tax advantages for the quarter, and it's all BS. Pay attention to the sales. Okay. Yeah, it's going to be a bummer, man. It's another just like my hip. It's another 12, 15 weeks of recovery. It's killing me, dude. Seymour Rivers, thoughts on gold? Let me get my handy dandy pen and paper out here. Gold. You got it. Apple's the new 8-track. LAB looks like it is in failure mode. Yeah, you know what, Darcy, it's been beaten up lately for the past year and a half. So I don't know how much real downside there is there. What we'll be looking for moving forward is is this going to be a tech correction or is this going to be a stock market correction? Unfortunately, the stars are in alignment for a stock market correction, but we'll talk about that more in a moment. But Apple is in trouble. They are going to weigh on the Qs. They're one of the largest component of the Qs, not so much Amazon. So I think the Qs take it on the chin tomorrow. Okay. We went over Apple. Let's see if they have any more news in here. Analysts expected Apple to repost a modest revenue slowdown year over year. iPhone revenue of $49 billion, down from $50.6 billion. iPad revenue $6.7 billion, down from 7 point. That's a big drop. That is a big, big drop there. Mac revenue $7.7 billion, down from that's a massive drop. They're a one-hit wonder. Except for services. EPS $1.26 from $1.20 a year ago. They don't tell you why they beat. Revenue $81.8 billion, down 1.4%, but also beating estimates of $81.5 billion. There's a contradiction there. Another service that was out there. This is why I said they missed on revenues, still expected more revenues, and I think that's why the shares are getting beat up right now. It's the revenues. iPhone revenue $39.67 billion, down 2.4%. It's the revenues, folks. Wearables, home accessories $8.28 billion. That's only up 2.5%. China, gangbusters. Gross margins only up 1.5%. I mean, this is not good. This is bad. When you're sporting a PE that Apple is, and as extended as you are on the charts, you had better deliver. Apple sales by geographic region. Where's the United States? America's here. And you can see trending lower. It's all about the trend, and they're trending lower. All right, so that's Apple. It's checking with Amazon. They have to throw AI in here. All right, here we go. Q2 EPS 65 cents, up sharply from 20-cent loss year over year. That's a huge comeback. Q2 net sales 134.38 billion. What a juggernaut! Up 11%. Huge. Online stores net sales up 4.2%. They beat. Physical store sales up 6.4%. I didn't know they had that many physical stores to do 5 billion. I guess that includes Whole Foods. I'm assuming. Third-party sellers up 18%. Subscriptions 14%. North American net sales up 11%. Wow. International sales up 9.7%. I mean, what's not to like here? Company sees net sales between 138 billion and 143 billion, or to grow between 9 and 13%. That's massive. That is huge. Operating income 5.5 billion. That's a pretty wide range, to be honest with you, on operating income. But compared with 2.5 billion in the third quarter of last year, I mean, even if they meet on the downside of the $5.5 billion mark, that's still a massive increase over the prior year. The year over year results are just, wow, mind-boggling. So Amazon, bravo, man. Okay, let's talk about why we're here. And that is because of Fitch. That is truly the problem, the 800-pound gorilla in the room. And it's not that there hasn't been a problem. It's just that only guys like me talk about it, and not enough people watch me. There's not enough people out there hammering the table. Peter Schiff is not enough. There's just not enough people out there saying the king wears no clothes. The narrative of this is a strong economy is hogwash. And I made a video yesterday morning in response to the Fitch downgrade. I said, as sure as God made green little apples, they're going to bring out these talking heads that are going to hammer Fitch for making a bad decision. So who comes out? The gray old lady herself, Janet Yellen, comes waddling out and says it was inappropriate, whatever verbiage she uses, like grandmother. You had Jamie Dimon come out, and then finally today you had Warren Buffett came out, and they dragged him out of the closet back in 2011 when S&P 500 downgraded our debt, along with this guy who began this entire, and he's not even a Keynesian, he began this entire love affair with priming the economy with massive amounts of debt. So this is him back in 2011 after S&P downgraded our debt. Let's give a listen.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
Are U.S. Treasury bonds still?
Okay. That's the attitude that this country has, is that all we need to do is print dollars and all is right with the world. The problem is they never look past their nose. They don't look at the BRIC nations. They don't look at the weaponization of the US dollar as us putting a gun to our own head. Not here right now, but in the future. The stage is being set. Maybe not even in my lifetime, but the stage is being set. So this is the attitude that our so-called elites, I like to call them parasites, have. They will continue this behavior until the bond vigilantes come out there and say, no mas, man. We're calling BS. And I think, frankly, that's exactly what they're doing right now in the bond market. Why? It's because not only Fitch cited the debt ceiling debate and the horrible deal that the Republicans cut, the uniparty, Democrats, Republicans, uniparty, all one party. The so-called opposition party, being the Republicans, gave them everything they wanted, plus some. $4 trillion of additional spending and no debt ceiling until after the next election. How much more can you roll over and pretend that you are dead. Then what's his name? Speaker McCarthy did during that debate. He's useless. He's useless. So this is why Fitch has come out. Why would you ever want to buy our debt? But now the Democrats, and my hat off to them, man. Ruthless bastards. The Republicans gave them an opportunity to spend like drunken sailors, and that's exactly what they're doing. They are spending with reckless abandon. So Fitch comes out and says, "Hey, we can't. We've been quiet ever since S&P came out since 2011. We haven't said anything, but now, hey, man, we've been good. Now we can't do this anymore." So now they're dead man walking. So before we get to the charts, I want to talk about all that matters to me right now, and then we'll go to the charts, see how we're poised to close out the week. And, you know, I've been coming on here for I don't know how long, 2-3 years, doing live streams Thursday nights and Sunday nights. And for the past year, I've been talking about the yield curve ad nauseum, because it's not a matter of if the yield curve is going to steepen. It's a matter of when it is going to steepen. And guess what? That's exactly what it's doing right now. And you're seeing the equity markets, which is what I've been warning about for a long time now, begin to buckle. So let's go over the Shiller PE ratio of the equity market. I mean, it feels like a much more bigger down week to me anyway than what it really is. We're up on the week. We went into the week neutral on the market with a bias to the short side. Plus, we had some put hedges on. We're good. And plus, we added more puts today. We're good. I'm fine. We had a good week so far. So Shiller PE ratio still above 31, folks. Still above 31. And yields are now above the March highs. What happened back in March? The banks buckled. The regional banks buckled. So we are at 52-week highs on yields. Excuse me, on PE ratio. We have tax receipts. We've been talking about this. Tax receipts falling off of a cliff. What will they do? Print more debt. Because good old Alan Greenspan says, hey, don't worry about it. We'll print more dollars. Okay. That's why the dollar is worth only about 10 cents of what it was back in 1971 when they took us off the gold standard. 10-year yield, weekly chart. We have now, at least on a daily time frame, perhaps not on a weekly time frame, maybe we'll pull back tomorrow. I don't know. I'm not that smart. One trading day left to go. We are now above and measurably above 4.08%, which was the high last seen back in February. Then remember what happened in March. Everything went like this because of the regional banks. Then what they did is they set up a lending facility that was supposed to solve everything. And what are the banks, the regional banks doing? Very quiet. But is the problem really resolved? No. Here's when they really went to this lending facility right here in March, and you just saw this facility get used dramatically by the regional banks, and we have never looked back since. We have far surpassed the highs of the end of the so-called regional bank crisis of 2023, and we still continue higher. What's wrong with these banks? Yield curve. All right, I'm going to go over this again because I want people to understand what this is. I can bring up, if you want to track this on your own during the day, all you need to do is this. Here is your 2-year treasury. They don't give me any numbers here. But today, this was measurably below. The 2-year treasury was measurably below the 10-year. This is usually live throughout the day, like this. So as long as you see the rate of change on the 10-year positive relative to the 2-year, That is a steepening of the yield curve. And that means that interest rates are moving where they're supposed to be because the market is demanding it. And whenever you get a steepening of the yield curve, and it doesn't have to be right here, right now, we haven't hit the highs of March, which is when we broke out of this downtrend channel. We actually did a double bottom setup or a W formation. Let's drill down here. 20-year view. There you go. So we are now pressing up higher now towards those March highs. Folks, if we close out on a monthly time frame above the March highs, the trend is clear. It is now changing from lower lows to now higher highs. The steepening has already begun on a weekly time frame. Let's take a look at it. And I started saying this earlier. I want to go back and say the yield curve has predicted every recession since 1955 without one exception. And here we are on a weekly time frame, one trading day left to go. We closed out the day, not the week. We closed out the day at a new higher high with a breakout. Here's your double bottom setup. We are now gone from lower lows to now higher lows, as you can see here, to now higher highs. I'm not going to really rely all too much on a weekly chart. I'm going to rely more on the monthly chart because that's when things get real fast. But equities are responding to the change in the yields, twos versus tens. And we'll go over the charts in a moment. Watch negative 0.83. We close above that on a monthly time frame. Look out above. And the 10-year yield on a daily chart looks like it's only going in one direction. Well, here's the yearly chart. We spoke about this a couple of weeks ago. Big breakout. It looks like it's only going in one direction, and that is up. We are getting to overbought levels, but I think we have more room in the tank to move up higher. So what else do we have to go over? This is another view of the bank lending facilities. This is off of the St. Louis Federal Reserve's own website, Fred. And it just goes to show you that since March, the usage of this lending facility has just gone parabolic. There's something very wrong out there. Here's the Fed's balance sheet. They continue to drop this thing like a rock. Here was the spike up back in March in response to the regional bank crisis. But here we are. They had slowed it down. And now we're really just dropping percent. It's as if they're trying to cause a collapse here, to be honest with you. It's really messed up what they're doing right now. You know, this rate of change is not good. And finally, I'm so out of sequence here. Finally, somebody took notice today. Liz Young, she's from SoFi. She's very good. 30 basis points of re-steepening for the twos versus tens yield spread in a week. Finally somebody gets it. I reply back, finally getting some notice. Anyone want to take a look at history of when yield curves steepen versus SPY? Just look at 2000, 2008, and 2020. Boom. Let's do some analysis of the charts. So again, with the yields, we have a breakout here. One trading day left to go. A lot can happen on a Friday. Always does. TLT. We actually opened up a position here today. Not what you think, though. We did not go buying TLT. We did open up a bullish position by selling deep out of the money 10 delta naked puts. Now, I think that we're going to get a counter trend rally here. On that counter trend rally, we're going to sell calls deep out of the money, probably a little bit more aggressive on the call side. Let's say 20 delta call to help hedge that put to the downside, because right now it appears as though we are going to move lower should we close out the week down below this support level. Here's the daily chart. Just when you didn't think it could go any lower from yesterday, hammered, leaning into the third standard deviation Bollinger Band. So what I'm hoping for tomorrow is that they rally this back up and into resistance. I think it's going to fail, but then what we're going to do is we're going to sell calls, and by selling calls, we are in essence shorting the TLT, the 20-year bond ETF. So that way now we are neutral on it with a bias, a little skew to the short side. So that way we have a hedge because the trend is down. We want to be hedged. Tips getting utterly annihilated. Now, somebody asked me earlier about gold. Seymour Rivers, when you look at this chart here, this is what all you need to look at to decide whether or not you want to buy gold. All right, if you see the tips that are cratering, you don't want to buy gold. You want to buy gold when the Fed says no mas on reduction of the Fed's balance sheet, no mas on additional rate hikes, and you have inflation still sticky at the core in particular. So if you get those three elements, Fed done, balance sheet reduction done, and inflation still sticky, gold goes like this. But not now. It's not time yet because equities are pulling back and they're probably going to go lower. And gold stocks will go down dramatically along with equities. Gold less so, but they will go down as well. We'll go to the chart of gold in a moment. Tips not looking good here because of fear of deflation, not inflation. US dollar grinding up higher here. I got to get my crayon out. And this is Dow Jones bearish, folks. It makes our goods overseas more expensive. And as we talk right now on a Thursday night, one trading day left to go, we have a weekly breakout on the US dollar. You don't want to go buying gold. Taking a look at the euro, third consecutive down week. Down volume is very light. But momentum is weakening up here too. Not looking great. Yen, possible higher low here. Stokes are rolling over. Not looking great. 50-50 which way they go, to be honest with you. The VIX. Okay, so not a great chart, but at current, we have a breakout on a weekly time frame above an upper band of resistance and above a horizontal resistance level. Do we close there? I don't know. I'm not loving the VIX of late because it's down when S&Ps are down and it's down when S&Ps are up, which is supposed to be, but it just doesn't seem to respond anymore. And I know at some point in time, somebody's going to play this clip and go, after we go into a big meltdown in the markets and we have VIX trading up at a 50 handle or a 60 handle, and they're going to be going, remember when you said this, it was never going to move? I know. Here, look at the VIX on the day. Just take notice of this. It's a bearish reversal bar. And here are the S&Ps. They were down over a quarter percentage point. And VIX was down. What's that all about? This is not a one-hit thing. This happens all the time. Transports. They have been leaders of late. And now this is a stock market looking to find economic expansion. And we're just not seeing it. That 2.4% beat on GDP, that was government spending driven, not private sector efficiency. It is not a quality report. So the Dow transports are now pulling back and still strong, but they're under pressure. Daily view. They were up today. Volume was good today too. Dow Jones Industrial Average still holding the breakout from last week. Let's go to a daily view. They have broken daily support. Stokes rolling over. Light volume down day today. S&Ps, weekly view. Very close to an outside reversal bar or bearish engulfing. Close enough for government work. And if you don't know what that is, link below, 5-part video tutorial, my top 5 favorite candlestick patterns, free. Stochastics rolling over, not looking good here. Not looking good. Let's go to a daily view. I drew these lines a couple of weeks ago, and we noted the lower highs, the bearish divergence on the stochastics. And this is why it's so important to use certain, not all of these indicators, because you get analysis paralysis. You use a few indicators. Price and volume matters most, and then you use your other momentum indicators to validate what you're seeing or invalidate what you're seeing at times. So right here, I think we nailed it in that we saw the lower highs and we expected a breakdown. We got the breakdown. How is volume today? Pretty light. Nothing blood in the streets-ish. Trip Qs, very close to a weekly breakdown. Now, remember, we opened up on Monday with a weekly breakout in time. What does that mean? Doesn't mean that we broke out on strength. It just means that there was no room within this wedge formation to trade into. So just in time, it floated outside of that upper band of resistance. Now we've done a bearish engulfing of last week's price action. We'll see how we close on the week. But if we close where we were at or lower, in particular lower, Qs are in big, big trouble. And momentum is telling us, look out below. Daily view. Now, in a daily time frame, we barely held on to support. We did go buying some additional put protection against our portfolio because while we're, I use the word neutral. We're option sellers, so we have undefined risk. And some people that get into this business and they say, well, you're selling 10 delta puts, you're good, you're safe. That's a 90% probability of making money. Until that day hits where, you have a 2 standard deviation move in the stock market, and all of a sudden you have your teeth kicked in. So you never want to rest on your laurels. When you see something on the charts that are setting up to be pretty bearish, equities don't usually crash up, but they do crash down. I've been there way too many times. That's why we're putting on put protection, just to hedge our portfolio. We're not net short the market. We're by and large neutral. We're just generating cash flow. That's all we want to be. Neutral, generate cash flow, and have an insurance policy just in case things go wrong. Simple as that. Let me take a breath here. Sean. Yeah, just print more money. They love doing that. That's all they know what to do. Most of these guys in Washington never had a private sector job. Patrick, hey, Bob, in AAL and SoFi scalping and selling calls, my man. How are the premiums on those? How are the premiums on those, Pat? Can you please look at Bitcoin? Yeah, I have it up in front of me now anyway. Bitcoin is technically broken out. It broke out 3 days ago, but then it did a reversal and failed. But now it's back above support. I want to look at this chart and I want to say, okay, what we're doing here is we are, what? I just got to do this. I don't want to do that. I want to keep that there. We are putting in a consolidation. We're getting ready for a breakout. I want to believe that. Momentum is telling us, yeah, it's looking pretty good. Relative to the equity market, it's looking okay. But your question was MACD. What is MACD telling us? I'm not a huge MACD guy because it's a rear view mirror indicator. And I like forward-looking indicators. But MACD, what it's telling us is that this is getting ready to pop. But the problem is you can get a lot of false positives, right? So this looks like it's going to go positive. and you'll see both lines touch each other, and all of a sudden they widen out. It's like a trap. So right now it's looking good. Would I buy Bitcoin based upon MACD here? No, I would not. I would always, always go with price action and volume action first. And I want to make sure I have momentum on my side because that increases my probability of profits. Now, if after we get validation by price, if we get validation as we are right now by momentum, that we are right in our directional call, and then we get MACD beginning to spike up higher, histogram higher, you got a positive crossover of the fast line over the slow line, then, okay, then I'm happy. Right now, MACD plays pretty much zero. I don't use it right now. I want to use it when it goes positive. I want to validate what we thought is accurate. Then I'll go add into a position, not here, not right now. Wait for the breakout. Yeah, NVIDIA was a basket case today. It was like a meltdown all day. Printed fund times, the value type budgets, free, dries up, yield curve, confusion. Here now, bank crash, commercial real estate, default stock crash. Okay, that's a top killing it. Yeah, are you along with that? Do we know why that's going up? I thought there were ongoing concerns there, like GME. I think it's more of a meme stock right now. Will Apple crush the markets? I think we're going to find out after 8 o'clock tonight. Right now, the futures are saying no. They're shrugging it off. They're going to look towards the Amazon earnings. They're going to try to spin a narrative there. We'll know after 8 o'clock Eastern Standard Time. Why does that time matter? It's when the extended hours trading for the average investor closes. And more often than not, you see a lot of volatility in one direction or the other occur after 8 p.m. So we'll know then. We'll know overnight when Asia opens up how they're going to take this market. I think right now, they just don't know. And they have to be watching the bond market. You know, I am not an economist, all right? I'm a trader. I'm pretty good at identifying trends. I'm pretty good at understanding economics, even though I'm not formally trained. I get it. I understand it. But I really get this. I get historical correlations or inverse correlations. I understand them like it just comes to me. It just comes to me. And this, to me, is like money in the bank. The steepening of the yield curve, if you're not positioned to take advantage of, unfortunately, it's going to hurt a lot of people. But there's so much opportunity here, I can't ignore it. So, do I want to be selling puts in this environment? Not really. Not really. I want to be selling credit spreads, call spreads. Maybe put some insurance on that just in case. Well, you have an insurance policy on it because it's a spread. Because when this all goes, you know, you could have a 5 delta option to the put, and you may think that you're far out of the money, but you could be down at that 5 delta. That could be a 30, 35, 40 delta. That's an at the money. 40 delta is an at the money option like that when this market gives way. So I don't want to rest on our laurels. That's why we're adding insurance to our positions. So we'll know soon enough. I think that after 8 p.m. tonight, the markets are going to begin sending us signals about what it's going to look like tomorrow. Let's see what Apple's doing here really quick. Is there any recovery at all? If it recovers somewhat, maybe there'll be, oh God. You know, this is only a few points, right? But the market capitalization that is going to be taken out of the equity market tomorrow is $100 billion more. I don't know. It's a lot of money. And this is a very heavy component of the triple Qs, which is hanging on by a very, very thin thread. If Amazon didn't come out and report earnings tonight, you could bet your bottom dollars the futures would be tanking right now. Yeah. Please, Denny, thank you. Smash the like button, please. And if you want to get notified when we go live, hit the notification bell, please. AL, so far, pretty good premiums. Okay. I know the price actions, ballistic restructuring. Okay. TZ Burton. Welcome, TZ. No doubt. Okay. Costco, you are welcome. 85 million shares trade of Apple tonight. Oh, you're talking about Tupperware. Gotcha. Okay. Let's get back to the weekly charts. All right, the banks. Now, the banks are holding on to support, but they are at the upper band of a trading range. I don't really care about the regionals. I care about the regionals. I don't believe I just said that. I don't really care about the money center banks. I care about the regionals. Duh. Down week, but not horrible. Not horrible. Technology, horrible. Bearish engulfing. Semis, horrible. Bearish engulfing. Looks like volume's going to come in light, though. LABU, of which we are positioned, not looking good here. Not looking good. And this is what has been something that, oh yeah, we broke support today. This is something that we've seen of late that is really like the Achilles heel for bears. Bulls, if you want to know what really destroys confidence at the top of a bull market is when you get breakouts. Like I added more here on this breakout to LABU. We had a small position. I added a few more shares. So I bought the breakout. Now, if we would have closed above 664, I would have gotten more aggressive. But it didn't hold. It broke down. So if you're a novice and a trader and you bought this breakout and you went full bore, you wanted to buy 1,000 shares overall, you wanted to buy 1,000 shares right away, you didn't leg into the trade, you're destroyed right now. You're destroyed. Your confidence is destroyed. Your pocketbook is destroyed. And this is probably going to go lower. So this is why you got to stay small, especially if you're going to go long and even short. If you're going to short right now, if you're going to buy right now, stay small. Today, when I was adding puts to our portfolio, I wasn't buying 10 lots, 5 lots. I was buying 1 lot. Consumer staples. Higher lows here on stochastics with the price actions, no bueno. These are charts that are hardly broken. They're not broken. So I'm not going to be the guy that comes on here saying, run for the hills, sell your stocks. But if the yield curve continues to steepen, consult your financial advisor. And please ask him before you have the conversation, do you know what the yield curve is and what it represents? And if you can't answer that question, find a different financial advisor. XLY. Breaking down. No shock here. No shock. But is it broken? No. It can come back one trading day. Emerging markets are in trouble. They're in big, big trouble. Why? Simple. US dollar strong, bad for emerging markets. You want to avoid emerging markets. Anything that has to do, or I should say, anything that trades inversely of a strong US dollar, you need to avoid. Commodities, which broke out a couple of weeks ago. We bought 100 shares of BHP Bulletin because it looked as though it was going to break out, which it did. But that breakout failed. We never added to the position. I still have it, but I don't plan on adding more to it until it breaks out and behaves right. So right now, anything that trades inversely of the US dollar, you don't want anything to do with. Nothing to do with. Energy. Good week this week because oil was up. Now, you may be saying, Bob, oil is priced in US dollars. What's wrong with your logic? It's just a little bit less correlated. Simple as that. You have certain sectors or certain commodities that are heavily inversely correlated to the US dollar. Gold, silver, platinum, palladium. Um, those are highly correlated. Emerging markets, highly correlated. What's correlated, but not that much? Natural gas. What was up today along with the US dollar? Natural gas. We own it. We have a spread, a strangle, and we own a call spread. So we're long of natural gas. So oil was up. Here's natural gas. Speaking of the devil, this is a daily chart. Let's go to a weekly chart here. Natural gas is down on the week. The however is, while the dollar was very strong today, or strong, not very strong, it was strong today. Nat gas was up on the session. Oil was up 6.27%. Really nice move today. We did well. And UNG was up 3.15%. So I would love to see a breakout here right now in a consolidation range. So if you're worried about the dollar going up, you don't want to buy natural gas, don't worry about that. That correlation is really not there because the United States produces so much natural gas here at home. We don't have to worry about importing it or anything like that. Gasoline prices. This is interesting in that we rallied right up into resistance. The question is, does this fail? I hope it does. I hope it does for me and the average consumer out there. But it's at resistance on a weekly chart, down on the week with oil up. That's odd. Gold, bearish key reversal bar. One of my top 5 favorite candlestick patterns. Link below, 5-part video tutorial, free. This is not looking good. One trading day left to go, but not looking good. Stokes rolling over. Volume is light. Let's go to the daily chart. We are at support on gold. Let's go back to the dollar for a moment. Because automatically, when I'm thinking about gold and I'm thinking about a setup for gold, my mind goes directly to what's the dollar doing. So if you see me pause, that's exactly what I'm thinking. So let's get these two together, see if they can make up. Gold meet dollar. How you doing? Okay, dollar's breaking out, and that is negative for gold. You're seeing that priced in. If we do, let's war game this out. If we break out on the week on the US dollar, what's it going to do next week? It's probably going to pull back and do a retest of this line in blue. And then the traders will be looking for a continuation breakout. So for that reason alone, I would not be a buyer of gold because this pullback and a retest, the expectation is that you're going to get a follow through and the trend is still higher. So what that means for gold is that you may get an up day or two next week, but if the dollar retests and gets a follow through, that means that the rally on gold is going to ultimately fail. So that's why I wouldn't be a buyer of gold. Momentum going lower. Volume did drop off today, to be fair. GDXJ, the gold mining junior stocks, not a good week. They're going lower. Bearish key reversal bar. Nugget, these are the senior miners, but a leveraged ETF, and they're going low. They're going. I'm looking for the mid-20s on NUGT or an increase in vol, and then we'll look to put on some options trades. Right now, there isn't enough volatility here to put a trade on. Volatility is rising, but only fractionally. I mean, this is down to what, 15% a couple of days ago. Now we're up to 23. So volatility is going in the right direction, but it's not enough yet. We need to get paid for the risk that we take. So it's not there yet. So we avoid. Silver, abysmal. Abysmal. This is going lower. Silver miners going lower. Platinum going lower. We were long with this. We bought back here. We booked profits up, not at this top of this wick, but here. We made a nice killing on that. Tesla weekly chart holding up. I got to tell you, strong stock today. CMG, I don't even want to talk about that one. Netflix up on the week. We have a position here, but it did fade into the close. Wow, what a fade. Good stuff. Horrible close for Netflix. All right, let's do some. Here's Meta. We have a position here as well. Stalled out. No continuation move up higher. Amazon. We hit a high of 142.97. I think we're going up to 146.23 in that neighborhood tomorrow. And then I'm going to look to sell premium, sell calls. Not before then. And I'm talking about selling calls all the way up here at around the 160 mark. I want to be deep out of the money. AI, not looking good here. Rivian, not much happening. Riot blockchain, waiting. All this is doing is waiting for a breakout on Bitcoin. All right, let's do some chart requests and we'll call it a night. All right, let's square off this screen. See if there are any members requests. We got to take care of the boys. Okay. We want weekly charts. Okay. All right, not much going on there. All right, how many requests do we have? We have gold. Any other ones out there? I'm going to go over gold. If you have any more, just pop them into the box. We'll go over them. And let's begin with GLD. We kind of already went over gold, but we'll go with it in a shorter term duration. You know I don't like it on a weekly time frame. Let's go to the daily chart. The trend is down. Intraday chart. There's nothing that I like here. All I keep thinking about is the dollar. 30-minute chart. We broke out at the back half of the day. Does it hold? I don't know. If that dollar moves up higher, all bets are off the table. I don't think it does. I think it fails. But right now, on a positive note, we broke out on a 30-minute time frame. What's my opinion on real estate? I think commercial real estate is dead. I don't know what they're going to do. There is going to become a day of reckoning at some point in time. You have REITs that are out there that their entire portfolios, if they default on a property, they only have to put up sufficient capital to buy these buildings. So they create like this one REIT returned a complex. I don't know if it was a hotel or whatever in Atlanta, and they just turned in the keys where they weren't going to meet the debt payments, and the bank has no recourse because each property that they buy is an individual LLC, so they can't go after the entire REIT. So the bank takes the hit. Now, when it comes down to residential real estate, I'm far more constructive. I don't believe that the U.S. Home property market is going to collapse. I don't believe it. You have people that are sitting on decades old now mortgages that are cheap as dirt. Why are you going to sell that property, give up that mortgage to go take out another mortgage on another property at a measurably higher yield? You may not even qualify. So that's why you're seeing the home builders in this environment rip through the ceiling. So they need to create more housing to meet the demands because people don't want to move anymore. Also, you have, I'm telling you right now, in New York City here, there are so many migrants. You can't get hotel rooms because the city has put them in hotel rooms. You can't get a hotel room. Unless, of course, you can stay at the Four Seasons or something like that, Pierre Hotel. But otherwise, you've had once beautiful hotels now turned into shelters. So that's why I'm positive on residential real estate. Commercial real estate, nah. Oxy should be doing good. Should be. Weekly chart. It's right up and into resistance. Oxy. It's not too far off. So I don't know if I would be a buyer here. Nice reversal bar here today. I got to tell you, this is actually pretty nice. I want to see if we retest this. Now, this is a outside reversal bar or a bullish engulfing, whatever you want to call it. Call it cupcakes. It doesn't matter. It is a bullish candlestick. But what you need to remember, we're using Trend Spider, folks. 35% this code below. I'm going to overlay on top of this daily chart, weekly support and resistance. Oh, that was the fractals. Or the fractal resistance levels. Here we go. Weekly. So here's your resistance up here on a weekly time frame on Oxy. So we closed at $60.03. You're going to start seeing a lot of resistance at around 64, 67. Not a lot of upside here before you meet a lot of resistance. So I'm not loving it. Would I be a premium seller here? Would I sell puts? Yeah. If you wanted the shares, you try to get a discount, I would do that. I wouldn't be a buyer, though. Jeff, great residential real estate explanation. It never occurred to me. Thank you, Jeff. Glad I helped. Oxy, we didn't do BTU, but that's Peabody, if memory serves me. Now, Peabody is a utility. And in a rising interest rate environment, it is not good to buy utilities. Why? Treasuries are perceived to be risk-free, right? What do utilities do? They issue bonds to help expand infrastructure, maintenance. They are not considered to be risk-free. So they need to increase their attraction to the bond market by paying ever higher, increasing interest rates on their bonds to keep up with treasuries. So as treasuries move up higher, they're in competition with treasuries, and having to pay more interest on those bonds hurts their bottom line. I don't like utilities here until we get a correction in yields and a rally in bonds, whatever you want to call it. So we're consolidating here. This could be a head and shoulders setup forming, left shoulder, head, right shoulder on a monthly chart. I would not trade off of that one way or the other. On a bullish note, we are seeing a higher low here. I got to be honest with you, it's looking pretty resilient to these rising interest rates. Wedge formation, ever tightening. Momentum is looking good. So I'm impressed here with the price action. We did break down. We had a breakdown on daily chart. We're holding the lower band of this Keltner channel in blue or green, whatever that color is. I want to check out the XLU. That's the utility ETF to see how it's performing on a relative basis. Yeah. See, this is why I don't want to own utilities right now. XLU hammered today. Here's a monthly chart breaking down. Avoid these utilities. Avoid them until bonds rally. Then yields drop. Then you want to buy utilities. All right, we're over, folks. PLTR. San Francisco homes, do you think the prices would come down? Yeah, because there's a lot of supply coming on the market. They're leaving. So yeah, I never would have thought I would have said that. I mean, San Francisco, that land is like gold. What, at one point in time now? I mean, it's what can you say? It's sad. Who wants to live there? Who really wants to live there? I mean, I don't even go into Manhattan anymore. TZ Burton, you're welcome. Gay, you're welcome. Sean, good night to you. Thanks for being here. Like, subscribe. You know the deal. Have a profitable trading day tomorrow and have an awesome weekend. Be well.